Hi guys, my name is Ashley and I'm a 20-year-old Forex trader. So you probably recognise me from my Instagram account or maybe my feature on BBC's Young Welsh and Pretty Minted. Anyway, so today I'm going to give you a few little lessons on the basics of the Forex market, okay? So how it works, how people trade it, and what makes currency pairs move. So I appreciate many people are familiar with the foreign exchange market, but to most people it will be a very new thing. So I'm going to start from the basics. So in a few minutes, I'm going to explain how this market works. So when you're trading, what you actually trade, and what makes these currency pairs move. So the foreign exchange market is the biggest market in the world. It trades trillions of dollars per day around the clock. So it appeals to traders who are trading large amounts and small amounts because it's relatively easy to get your trades filled. And the actual cost of doing business is much lower compared to other markets. So with the currency market, no currency moves in isolation, so you have an idea of currency pairs. So to make sense of this, let's take a look on the platform. So now we're on the trading platform called TradingView. So let's go to the top left and see what currency pairs we have to trade. So make sure you go to FOREX. Now here's a list of all the various different currency pairs. So we got euro to the dollar, pounds to the dollar, dollar to the yen, pounds to the yen, and Aussie to the dollar, and so on and so on. So there are literally hundreds of currency pairs we can trade, but most people just stick to the major currency pairs because there's normally plenty going on in those markets. So when we're looking at currencies and currency pairs, it's all about relative value. Is one currency stronger or weaker than another? To get an idea of this, let's take a look at how one currency pair has moved over the recent months. So all a currency pair does is it shows you the relative value between one currency and another. So if we look here on the pound to the US dollar, we can see at the beginning of 2019, so here August 2019, £1 would buy you about $1.20. But at the end of 2019, £1 would buy you $1.30. So when we're looking at foreign exchange trading, we are looking at one value of one currency versus another. Now, because we have currency pairs, I think it can be a little confusing for some people at the beginning. So when they click on, say, buy dollar yen, but what am I actually buying? Am I saying the dollar's going to go up? Am I saying the yen's going to go up? It's understandable why this is so confusing to some, but it is really easy to understand. So again, let's take a quick look on the platform to understand when we are trading, what direction are we actually trading in. Okay, so when it comes to directional trading, it is really easy. Like I said, it can be a bit confusing for some people in the beginning, but the best way to remember is, say you buy pound to the dollar. It's the first quoted currency in the currency pair which you would be buying. So if I buy pound US dollar, I'm speculating that the pound is going to go up, which means the chart is going to go up, which means the US dollar is going to fall. So the pound's value is going to increase against the dollar. So for example, if I bought here, for example, in the beginning of August, was holding my position until October, I would be sat at a pretty healthy profit. But if I thought that the pound had gone up too far and I thought the market was going to fall, I would think to myself, so how can I profit from this? What I would do then is place a sell. So sell the pound against the dollar. So I'd be speculating that the pound is going to drop and the chart will turn lower. Okay, so that's the rule of thumb when you're buying or selling. So it's the first quoted currency that you're buying or selling against. So if we sell dollar yen, for example, we are speculating that the Japanese yen will rise and the dollar will fall. So when it comes to trading hours, the Forex market is a true 24-hour market. So it starts off on Sunday at 10 PM when the Asian market's open, all the way to Friday 10 PM when the New York market's shut for the weekend. So you don't need to be intimidated by this 24-hour market. So let's take a look at some of the moves that we see and how we might want to trade it. Okay, so here's a snapshot of pound versus the dollar. So each one of these candlesticks, the green and red things, they represent 15 minutes of trading. So here we are, we can see this is a 24-hour market. See here, as we'll start from 12 o'clock at night, okay? So 12 o'clock at night, here's the Asian session kicks in, okay? We lose momentum. Brings us down to 6 AM, on the 14th of November. Okay, so it's sort of 7 to 8 a.m. GMT. So around here, the focus shifts to Europe. So as we can see here, the market rises. It brings us over to about 9 o'clock. We lose a bit of momentum, bringing us down to around 1 o'clock, and then we pick back up. Here we are about 5 or 6 p.m. The focus is switched to the American markets, and we have somewhat of a quiet finish to the day. So don't be worried that this is a 24-hour market. Thanks to stop losses and take profit orders, we can set up a trade. So if a certain level hits, it will automatically close a trade and take a small loss, or we can come out with a profit that we were expecting. So just because this is a 24-hour market, we don't need to watch the markets around the clock either. So no sitting there in our pajamas with a Red Bull trying not to fall asleep. When you're trading Forex, like so many products nowadays, you're using leverage to trade. So even though you may have, let's say, a $100,000 position on one currency, you don't actually tie up the whole amount, because traditionally currencies don't move that much during the day. You're trading using leverage, okay? So you have a situation that a small sum of money can control a much bigger financial position, but of course that gives you potential for greater profits, and hand in hand goes the risk of a bigger loss. That's why it's important to manage risk using stop losses, which I will be doing a video on soon. So the last thing I want to cover is what moves the foreign exchange pairs. In short answer, it's potentially everything. Everything can have an impact on the markets. For example, interest rates. If interest rates in one country were higher than the interest rates in another country, that could mean that currency is appealing. But hand in hand, higher interest rate may mean that it's a weaker economy, which could make money flow the other way. Just like unemployment figures have an impact as well, and most recently political events, okay, such as Brexit. And we look at the pound, we've seen it very volatile since April 2018. So all these things come together and affect the Forex markets. Okay, so that's the end of my first video. I hope you had some clear answers from this and made things seem a lot more simple. If you've got any questions or video suggestions, then please send them over on my Instagram. Also, if you don't follow me on Instagram, make sure you do. My link will be in the bio. I post trade setups most days too, which is quite helpful. Also, if you could leave a like and a comment, that would be greatly appreciated. Thank you very much.